With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Nadine Blaney. Big budget day, as you know. If you go to ausbiz.com.au, we've collated all of our budget coverage in a nice little package, a rail is what we call it on the website, so you can catch up with, not just what the budget will mean from a markets perspective, which of course I'll be speaking to my guest Mark Gardner from MPC Markets about, but also, the broader economy, Australia's position in the world. Obviously, there was no direct reference to Trump, but talking about bolstering the Australian economy and as well, perhaps picking winners a bit when it comes to green metals and the clean energy transition. But let's leave that there. Let's talk about the market because it was a positive session. Nice to see 0.7% gain for the CIBO Australia Index. And if I take a look at some of the sectors, we've got strength being seen amongst the banks, amongst the big miners. The insurers were looking pretty strong, as were some in the healthcare space. The really big weight was CSL. In fact, CSL down by, about 1.4%. So that's pretty chunky and is a pretty big weight on the market. But look, we'll get there in just a moment. I think we've got to talk about Chalmers, as in the treasurer. It was a fourth budget. It's an election budget. It's a budget that the government isn't necessarily looking to hand down. But when you put Australia's economic position, debt position, particularly in the global context, not looking too bad. However, is this the time to be offering small tax cuts? Maybe so when you take a look at inflation, which we got today at 11:30 for the month, coming in below expectations. It was the 7th month that we have seen inflation come in within that target RBA band of between 2 and 3%. So what does that mean for interest rates? Well, we'll talk about that coming up as well. And we had a number of great discussions on AusBiz about that throughout the day as well. Back to those sectors, let's take a look at some of the figures behind the performance here. And we've got CBA doing some good things for the market overall, up by 1.2%. Westpac was up by more than a percentage point as well. But check out ANZ, up by 3.4%, bringing it to $29.42. So why? Well, we have a bit of news around ANZ today. A bit of a broker talk coming from Morgan Stanley, and Morgan Stanley calling ANZ its preferred pick, replacing NAB. That was a little while ago, but today coming out and saying that Australian bank buybacks are probably coming to an end. They no longer forecast any new buybacks once they complete $2.6 billion of those previously announced buybacks. They also expect the country's prudential regulator to raise Tier 1 capital requirements, which would likely lead to the Big Four adopting new, higher target ranges. Okay, here you go. Here's a look at BHP, up by 1.13%, $39.48. I've been told many times that BHP under $40 is looking pretty good. You've got Rio Tinto at 120.19, up by a percentage point today. Consumer staples continue to motor along. Coal's up by 1.6%. I guess some cost of living, electricity relief in the budget as well. Underperformer, look no further than healthcare, as I already detailed. We've got CSL off by 1.4%, but there was a bit of money in the budget for some healthcare initiatives, including the PBS, which of course is sacred ground really here in Australia. Even if the Trump administration doesn't like it, they consider it to be a subsidy, to be a tax on their pharmaceutical companies. Interesting, they also consider our GST to be a form of a tariff on US goods. My, is there anything they don't take issue with? We've got Paladin Energy facing weather-related disruptions at its Namibia mine, so it's pulled its forecast. Fleet Partners as well forecasts a net profit boost, but it is narrowing its forecast guidance range to us, on track to achieve full-year positive net profit, but not doing well on market today, off by 7%. Vulcan Energy, I'll be speaking with the CEO actually after this program wraps. We'll bring it to you tomorrow on AusBiz. And that share price is up by 12%. It's got strategic project status for its Lionheart lithium project in Europe. And KMD Brand saw its half-year loss widening. Shares are off by 4.5% to $0.32, so proving that a bad situation can get worse. Let's talk about it all with Mark Gardner, who's joining us from MPC Markets.
Good afternoon.
That was quite the mouthful there for me.
It was indeed.
Lots happening.
Absolutely. So budget last night was an election budget, so pretty populist overall. I think probably that there is a fair bit of fiscal stimulus in there in terms of tax cuts, cost of living measures, etc. So I think that probably, despite the fact that inflation's come down, probably means that the RBA is under no dramatic pressure to be cutting rates, because we're getting easing in the form of fiscal stimulus rather than having to do it via the monetary route. So and we've been obviously at constant conflict between fiscal and monetary policy for quite some time. I wouldn't expect the RBA when they meet next week to be changing too much, particularly after the RBA minutes as well were relatively hawkish. So. Obviously the budget, a lot of the budget's leaked beforehand and polled, and obviously they'll cut out the unpopular bits. Pretty surprised. Ramsay down today. I think the boost to Medicare and the PBS and things like that should really help hospitals, but obviously it didn't. And maybe people were expecting more, or investors were expecting more. But overall. It was fairly uneventful, but they've tended to be that way.
Well, we tend to know everything that's going to come. The one thing I suppose it was a surprise was that $5 a week tax cut coming through. That's not going to change the narrative dramatically, although it's giving them a little bit of ammunition, I suppose, heading into the election.
Yeah, so, and then obviously the foreign buyers ban as well. So they're pretty, I think they didn't expect to be delivering this budget, I don't think, overall. So a lot of they're not dramatic policy changes. They just seem to be quite convenient sound bites for the election in terms of bringing down taxes, improving the cost of living and the housing affordability. So, which are pretty key in the polling, are very key issues. So they've managed to address those and probably not make any drastic policy changes can be unwound if they lose the election, so it's not really worth taking the risk. It was pretty steady as she goes overall. And obviously, we in terms of Trump and tariffs, it changes on a 12-hourly basis at this point. He's been a bit quieter than normal, but you mentioned something about copper tariffs definitely going through. And that pushed, we had a record high last night in the US dollar at $5.20 a pound, but it spiked up to nearly $5.40 a pound today. So
what's this?
So basically, this is the long-term projection on essentially there's not enough copper being discovered or new mines being set up, and obviously with AI and the energy transition being two fairly strong thematics, we're going to see that supply gap widen over the course of the next few years. It's been on the radar for quite a long period of time now, but markets don't tend to react until we actually are in supply deficit, and even the LME contracts as well, London Metals Exchange contracts, are starting to head above 10,000 a tonne as well. So we're looking at Capstone Copper, which has got 31% in the US operation in Arizona. So it's a Toronto listed company which is co-listed here.
So what are you saying? You are looking for those strategic opportunities that have operations in North America because of its proximity and, I guess, exclusion from tariffs?
There's a rush to divert copper to the US, which is why prices are going up in US terms. And that's where we're seeing the record highs there. London Metal Exchange is not at record highs. It's just shy, probably 6 or 7% shy. So anything obviously that's going to increase the margin for, if you're not subject to tariffs, you're just automatically increasing your margin by 25% compared to your competitors. And so that's one that obviously hasn't been around a long time, but they've also got 30% of their operation in Chile and I think some in Mexico. So they'll be subject to tariffs, but and obviously the ETF wire has been going fairly well recently, and that's a diversified basket of copper miners globally. So, but very much concentrated in the US, but there is still a lot of global copper miners in there. But further to your point, BHP under $40 with copper at record highs, and probably having a look at Rio as well. They're increasing. I know iron ore is a very large part, but those two companies particularly are two of the biggest copper producers in the world, and I think you'll start to see, if prices go higher, a lot of their revenue will, the percentage of revenue from copper is going to be dramatically increasing. So I think that those big miners are pretty cheap there as well.
Yeah. Okay. So if we've got those tailwinds behind the miners, and I was just hosting a panel discussion I mentioned for the Australia-Israel Chamber of Commerce, and Rick Deverell, who is the chief economist at Macquarie, was there, and still talking about more significant stimulus coming from China later this year. So even though we have all of the uncertainty in terms of trade and politics in general, do you still think that there could be a tailwind, there could be some momentum for these miners in the latter half of the year?
Absolutely, I do, yeah. And obviously that sector was down 20% last year, or 19 odd percent for the ASX 200. So, and they're trading at single-digit PEs. I've been talking about this for a while. The banks really did, nearly all of the heavy lifting last year, and tech essentially. We're seeing a bit of a normalisation in those two. I think the banks will stay somewhere around here unless there's a broader market sell-off. And I think valuations will catch up to forward the forward earnings will catch up to the valuations. So I don't really see massive downside necessarily with the banks, but obviously with commodities going through record highs, a lower Aussie, we've had a fairly low Aussie dollar for a period of time, and China coming back online. We are needed by both China and the US, and because they don't really have other alternatives in many scenarios. So realistically, I don't see us being a victim of a trade war. And China's been fairly quiet overall. I don't think there's any retaliatory measures from them so far directed at us. So yeah, I think it could be, that sector of the market could be, it could rally a good 10-15% and still be probably fair value at this stage. So I think they're fairly undervalued at the moment. Iron ore, maybe Fortescue is probably not the one to be buying in that sector. Iron ore outlook is still a little bit bleak. But those with the diversified miners, I think particularly, should be in for a fairly positive period.
So interesting to see in the budget papers, the Treasury still forecasting iron ore at $60 US per ton.
Yeah, I mean, they've done that for years.
Yeah,
so
no change.
But I guess in a way, you would rather be pleasantly surprised than bitterly disappointed, because that's how they play things in politics. So yeah, but I don't really see iron ore dropping. There seems to be a lot of stories when iron ore drops in the papers and in the media, and then silence when it rallies back up. It really hasn't gone, much of anywhere for quite some period of time. So, and I think there's some pretty good initiatives from those big mining companies, particularly Fortescue, in terms of efficiencies. So a lot of automated machinery and reducing costs, and they're electrifying their machineries and trucks, etc. So costs will come down for them as well.
I was just sort of doing a little scroll while you were speaking. There really wasn't a lot of corporate news today. Sometimes when we're all distracted by the budget or the election or something like that, you do get sort of big news dropping. But are we in sort of like a lull period? We're sort of post-reporting season. I know we've talked about this before. I mean, when's the next conference? When's the next AGM? What are we sort of looking for in terms of corporate activity? Yeah,
I don't see much for the time being. I mean, we'll obviously have US earnings seasons coming up. Yeah. I think that will be a little bit of a catalyst. I'm really wary of next Friday's payrolls, because we're starting to see, I think what the market might start to look forward, or not look forward to, but is looking forward at, is the economic numbers in the US are softening, and they're softening broadly. And we haven't had a negative payroll since December 2020. It's been a pretty long streak. So I think a negative payrolls number, a headline payrolls number, would really shock the market, and people start being concerned about the health of the economy in the US.
But then won't they just start pricing in more Fed rate cuts?
Yeah, but potentially they will. I think they're already pricing in 2 more this year, and really, Trump's tariffs is the thing that's holding them back. But that would just be another it could be just the straw that breaks the camel's back in terms of Trump uncertainty, trade wars, etc., and then a softening economy on top. The horse would have bolted by then. I don't think rate cuts is going to. So the Fed's in a really difficult position because whichever way they move, it's probably going to be too late.
Yeah.
So.
Well, I'd love to leave it on a cheerful note, but let's just leave it there. And when you consider it's a positive session for the S&P ASX 200, let's take that. Mark, thanks for coming in. Mark Gardner there, MPC Markets. So the stock of the day was Paladin Energy. It was a technical analysis special on the call today. David Novak from Wealthwise Education and Michael Gable from Fairmont Equities.
See, it's clearly on a downtrend here. Those two lines there, that's a 20-week moving average on the red line, and the blue line is a 50-week moving average. So you can see when the red line crossed below the blue, that means there's a change of trend from up to down. So right now, just based on the trend, you would not be buying Paladin, and plus the fundamentals don't stack up right now to be rushing in to buy.
You need to wait for that trend to turn higher. It's effectively been following the spot price, which is extremely illiquid in this space. So the shares are back to where they were sort of mid-2023 when the long-term contract price was sitting at around $56. It now sits at about $80. So if it was actually reflecting contract pricing, the shares should be sitting around sort of $10, $11. But obviously it's moved with the spot price, which has basically come back on next to no volumes.
So there you go. That's Paladin. Let's take a look at some of the leaders on this positive session for the local market. And they will take their sweet time coming up. But while they do, for those of you listening in podcast form, we've got some good gains. Can I close that? Good gains being seen by Ramelius Resources. It's up by 6%. It's restarted Spartan's Dalgaranga mill, and its price target has been lifted by 8.7% by Macquarie, Fisher and Paykel, Helia Group, Spartan Resources, and Bega Cheese leading the pack. Laggards being Paladin, Neuren, Digico, that infrastructure REIT at $3.34. Deep Yellow, and Clarity Pharmaceuticals, which has just been so volatile as of late. Let's get across some of the small to mid-cap companies. We've got Delta Lithium up by 14%. Another company in the small cap space that did well was SciDev. Got its first U.S. contract, and the share price rose off the back of that. Though we did see some pressure coming through, 4D Medical off by 8.5%, and Decider AI Technologies down by 8% as well. Overnight, we get U.S. durable goods, we get crude oil inventories, which are expected to come in lower at 1.5 million barrels in commercial firms inventory, down from March. Tomorrow, here locally, we do get December quarter GDP data. We get household wealth, at record highs. And so we'll see what happens when we get that report, hot on the heels of today's inflation report, which did come in better than expected. Ex-divs are still coming through. Eagers Automotive, IPDA Group, and Maz are all trading without their dividend tomorrow. All right, so let's take a look at this, the CBOE Australia Index, reflecting to a large extent what's happened for the S&P ASX 200, keeping in mind that we also saw the Aussie dollar edging up despite that inflation data. And so the market is just 1 point away from 8,000. The S&P ASX 200 rising 0.7% to 7,999. We'll see if we can make it past that psychological mark tomorrow. We'll bring you all you need to know from 9:45.